Hello, everyone. Welcome to the Aggregators and Brands podcast with my co-host Omar. And today we have a
Guys,
really very exciting opportunity and exciting conversation with Patric, who is, if I'm not mistaken, also head of the strategy. In the branded, it's one of the aggregators that is really doing well, and it looks like they have a great office as well. So Patric, it's up to you. Like, please tell us about Branded and yourself.
Great. Hello. Great to be on. Great to be with both of you here. So I'll start with me and I'll talk a bit about Branded. So I came to Branded about a year or so ago. My background is in finance. So I spent the better part of 15 years as a banker at Goldman. Have raised a lot of capital, have advised on a lot of transactions, very familiar with the nuts and bolts of building and growing companies. And I spent a couple of years doing some media strategy at CBS, and some former colleagues of mine at Goldman incubated and launched Branded at the back half of 2020. And so I came on board at the beginning of this year. So we're doing amazing things, and can't wait to share that with you guys.
that sounds really good. So your background is actually pure financial, yeah?
So it's finance, but I've worked in sort of media and technology. So it's sort of at the intersection of finance, media, and technology.
Oh, which makes it really a great, in order to work with an aggregator. This is an amazing background. You have the M&A background. You have then you have other people which know Amazon very well. So I think this is definitely a very good insight, into the structure of this business. Very, very exciting.
In some ways, I've seen this movie before, having spent a lot of time in media in a prior life. Now, I've seen the disintermediation of intermediaries in marketplaces, right? That's happened in media, in music, in movies, with Netflix and Spotify, et cetera. We're only in the beginning stages of that on the consumer product. And so right now, especially in the categories that Branded's focused on, which we'll talk about here in a second, the penetration levels on e-commerce are low, 20-ish% in some cases. And so there's just a ton of runway to go here.
Wow.
So a lot of the lessons that have been learned from sort of intellectual business, IP businesses around media are now being applied to consumer products. We can talk about that as well.
Okay,
Right.
I think that is very, very interesting what you just said now. The 20% high as well. 20%, I wasn't aware that we only had 20% right now, because when I look at everything, I thought like, okay, if we go to 2022, we kind of max it out, and then I want to see as well the shift, what will be going on. So what do you think about it? Hi, is as well do you have the same feeling or not? What do you think?
Well, I mean, that's becoming really exciting, but there is a report just launched yesterday, right, from Market Pulse, and according to that, and it's really, actually, it's not even it's like the date is like December the 9th, so it's very fresh. And the aggregators raised like $12 billion. That's one of the things over 2021. And this 12 billion, I mean, there is a lot of money, like obviously half of it, or more than a half, is raised by Trust.io alone, which is like 7 billion. And there is other 40 aggregators that kind of raised 45% of it. So that's kind of interesting. Another interesting fact is the aggregators are now coming from 20 different countries, like originally from Netherlands, Switzerland, Turkey, Japan, Luxembourg. I mean, that's also, I think, a new trend. Like, we're gonna see all these local aggregators. And another trend, obviously, because the aggregators are raising the money, the valuations are increasing twofold. Like, I mean, almost like the valuations over a year doubled, according to another paper that I was checking just yesterday. And a lot of brokers are kind of working on that valuation reports and things like that, which seems to be nice for the private label and the brands, because like, at least there is another way of generating revenue. There is another reason to build very strong brands. And I'm gonna go back to like Patric here. So I mean, you have a great background. You already said there is a lot more potential here to acquire and operate the brands. And what is like, and then I mentioned that like there's like 40 aggregators roughly. It's actually even a bit more than that. But like, what is then, always we get this question, like, what is the differentiated with branded? Like, what do you guys do to be even more successful compared to the other aggregators, as well as like whatever the focus that you have? So if you can tell us a bit about that, that would be great.
Sure. Yeah. Ton of stuff in there. I'd say at the outset, you mentioned sort of the amount of capital that's been raised. I would say we're in a very, kind of what feels like a very frothy, toppy market from a capital markets perspective. So capital has never been more available, and it's never been cheaper, and it's never been easier to raise. So obviously there's enormous amounts of secular tailwinds in this space, and so capital is attracted to that. We've had some early movers have some real success on the market on Amazon and on D2C as well. So it's no surprise that there's capital flowing into the space. I would say 2022 is going to be a year where people differentiate themselves, because there's a difference between raising capital and putting capital to work efficiently and actually growing businesses. And so I think that's one of the things we're going to see going into 22. For our part at Branded, we actually don't consider ourselves an aggregator. If I hear the word aggregator, to me, it means zero value add. It means 1 + 1 = 2. You're just aggregating assets. There's not much interesting about that, and there's not a lot of sort of value to be had in that, frankly. And so, our founding ethos is one of we're operators, right? And so it's probably one of the single biggest differentiators between Branded and a lot of the other quote aggregators, I would say. The founders of this business scaled a multi-billion-dollar e-commerce business in Southeast Asia called Lazada, which I'm sure many of your sort of listeners are familiar with. They scaled that up to about 12 or 13 billion of GMV.
Right.
Wound up selling it to Alibaba for $3 billion back in 2017. So if it's just a bunch of finance people running around, buying assets, kind of like like a private equity firm would, that's not interesting, and there's probably not a lot of value to be had there. What we're attempting to do is really, we're e-commerce operators, so that's first and foremost. Secondly, as our name suggests, we're focused on brands. We are not necessarily interested in assets that are commoditized or in companies selling commoditized products. We want either products that are very different and unique, or we want brands that people are searching for on Amazon and frankly off Amazon. So that's really important when we look at targets, and that makes us very different. So whereas others are taking much more of a horizontal approach to the Amazon marketplace, they'll buy anything if it fits a certain set of financial parameters. We're very vertically focused as well, and so we have deep category expertise in sort of kind of 6 strategic categories that we're focused on. 2 of the biggest of those 6 are beauty and personal care and health and wellness. We like these businesses because they're underpenetrated from an e-commerce perspective, even relative to the broader market. They also happen to be businesses where you can build brands. People search out these businesses on a brand basis. You care about what you put in your body. You care about what you put on your skin. These brands can be animated on social media, which makes them very powerful. And you can drive traffic off Amazon to Amazon, which makes it very interesting. And these products are also consumable. So once you acquire a customer, you can hopefully sell them 2, 3, 4 times. So we really like that vertical category sort of focus. And we have people from L'Oreal, from P&G, from like the world's largest and most sophisticated CPG companies who in their prior lives at those companies were playing defense, trying to hold off all of the challenger brands and the new digitally native brands, new marketplace brands. They come to Branded, now they're playing offense, right? We are challenging the Unilever's of the world. We are challenging the P&Gs of the world. So it makes us a very different animal. And I think the last thing, and it's sort of the 4th point that makes Branded quite different. And if any of your listeners are sort of sellers out there, most aggregators out there, it's sort of a pay and go away model. So they pay you a little bit, they pay you up front, and there's a bit of an earn out, and then you kind of go away. We actually have over the last year, over 3/4 of the companies that we've purchased, the founders stay on. They run the business. They have the joystick. We think it's really important to have that kind of Amazon ninja level talent in the organization. We bring other things to the table in terms of capital, supply chain, marketing, et cetera. So if you want to double down on your brand and you believe in yourself, talk to us, because we've got entrepreneurs on our platform that are running their businesses alongside us. So we think that's a very, very different conversation with a lot of founders out there who want to de-risk a little bit, take some chips off the table, but really see value in what they've built and want to continue building. So that's a little bit about us and what makes us not an aggregator.
Right. No, that's great. By the way, I mean, I really like that, you are focused on not just like one single category, but like, you have brands from home and kitchen, like beauty and personal care, lifestyle, and and also I really enjoy so a couple of your brands that are also kind of publicly available information is like Your Kitchen or Viking Revolution or the Leaf Life Tea. That's all kind of like really great brands. They are not unique to like a private label just for Amazon, but that has a lot of potential like in the retail space, a lot of potential with like a web store, Shopify web store. And also one of the things I think that because you are telling it on your website is like you take these brands and probably you have the experience, with your founders, everything to make it more global, like how to make it work in Alibaba or Lazada or, other places where there is tons of potential because very interesting, but like in the Asian markets, the penetration of e-commerce versus retail is like 2 times compared to even US. And I was really surprised when I started like working, not in my current capacity as the founder of Eva, but before that I was dealing with like Southeast Asian marketplaces and also Indians. And I was so surprised, like, it's like far advanced. Like I'm telling them things which they only did like 5 years ago. So that is an interesting experience too, to bring that culture, which already started from e-commerce. Like it was not there with retail, and there was just a new culture in this, Far East Asian, like the Asian marketplaces. So I think that's also a great experience.
Yeah, as we think about the value levers, that we bring to a business, one of the big ones is geographic expansion. We're a global company. We're headquartered here in New York and in Paris. The founders spent the formative years of their professional careers in Asia, and we've got a sourcing team in China, et cetera. Just like kind of, I guess some folks, maybe not all. So we are global. So when we're taking a brand, from one market to another, we're not entering that market. They're all home markets to us. We're not figuring out, how to get into sort of France or the UK or what have you. Like we have people on the ground. We live there. So we're a global company. So that's one of the big levers that we pull, when we buy brands. I think the other one, you mentioned it, Hai, as well, is multi-channel. Our business is mostly on Amazon today, probably 90% plus at this point. We have bought a couple of D2C brands that are solely D2C, and a couple of the brands that we have, part of the other growth levers we have are putting them into new channels. So we've got a team that gets our brands into brick and mortar stores in the US. We're beginning to do that in Europe. And for select brands that we think can exist and thrive off the Amazon platform, we have built, D2C websites. And like I said, a couple of the brands that we have, we're sort of D2C native, I would say. And so there's a bit of cross-pollination going there, because the reality is customers are everywhere. So you need to be where the customers are. And not every brand necessarily should or needs to be in every channel, but for the types of brands we're looking to acquire, most of them probably should be. Some of them will stay on marketplace, right? But some of them should absolutely be D2C brands and some of them should be on kind of retail shelves. And what's fascinating is a lot of the conversations we're having on the brick and mortar side is that the social proof points of having a really strong brand on Amazon now resonates with Target, right? It used to be that they didn't care. Now they actually care. And so there's that the world is a little bit upside down. And so it's the same thing I saw in media, where it used to be, Netflix just had licensed content and it wasn't that interesting and it was stuff you'd seen before. And then Netflix started doing originals, and then all the actors and talent wanted to come to Netflix and produce for Netflix. There's a similar shift happening on the consumer product side. And so we're seeing that, and we're excited to be a part of it. And frankly, partner with a lot of the entrepreneurs and what I call kind of creators in this space, who are developing the new products, the new brands. So the entry point has never been easier to launch a product in some cases. And so it's really empowering a lot of people who would otherwise, been stuck in a big kind of corporate. Now they get to do their own thing and really use their full talent stack to do something kind of creative and entrepreneurial and fun. So partnering with those folks is a model we think is really fun, and frankly is aligned with the way the world is going.
That's already really good information. And I really think that what I've seen from Joint Branded is as well that you go into the consumables, which other aggregators don't really want to touch, So we always hear when you ask aggregators, or let's not say aggregators, let's say operators, because not all aggregators are operators, not all operators are aggregators. So when they go, for example, they don't want to go to supplements. They don't want to go to cosmetics. They don't want to go to consumables like anything to eat or in the food categories. So you, from what I understand, you sell the tea. You go to cosmetics. So you don't shy away from all of these things, because what I as well believe it's these are the products which will be very, very big in a very short period of time, because actually of this fact that they are made for the consumer. And if these products are good, and if these products are very well marketed, like through your company, which have a lot of budget in order to market them correctly, and have the knowledge as well to market them correctly, and have the owners, which are actually which is their baby as well, these brands, this can only be a win-win situation. Now, I'm not sure about other companies. For example, recently there is a company out of China. They got as well a large funding, and as well out of Mexico. I have an article here from TechCrunch. They are pretty big, but most of the companies, they're trying to go only into the home space, sports, baby, and pets. That's it. They don't want to know more. I understand why, but I think if you want to go further, you should as well attack the ones which are maybe not so easy to handle, because in the future, these are the ones which will be breaking through. I don't say that baby and pet category and sports are not a breakthrough, but I think sports will retrace a little bit, because now we go all back to the gym, and I don't think there will be another, home lockdown crazy like last year. So I think it's really good how you handle it, and it's as well an example how others should look into it, because these are the brands from tomorrow.
Yeah, listen, there's no doubt that in some of the categories that we're focused on, beauty and personal care, health and wellness, these are tough categories. It's hard, but there's value there, right? If you're going to be selling these types of products on Amazon, you need the right regulatory counsel internally, right? You need the right product design people internally. These are products that are difficult to manage, but if you can do it, and there's value to be had there. And so the same components that a large cap CPG company would have inside their company, we have inside Branded, right? Which is very different from others who I think they're focusing on some of the categories you mentioned because they're frankly easier to manage, right? It's all you need to do is make sure you've got the right sort of contract in China, supply chain that can be done. I think it's a little bit easier to do that, frankly. And I think there's going to be more competition in those sectors as a result. And like I said before, we're aiming to build brands here. And so in the categories that we're focused on, people are sort of discovering and sort of evaluating products off Amazon, whether it's social media platforms or what have you. And so I think the consumer products companies of the future are going to be very much intertwined between social, animating and sort of using social media and driving awareness and, kind of purchasing on those platforms. So we think that's what the future is, and that's part of why we like these categories.
Absolutely. The other thing that I can add to that, like, last year, same time, if you look at like Trust.io webpage, it was very simple. We buy FBA business. And then every other aggregator was like doing the same. Okay, I'm interested in FBA business, not even FBM, like, just a specific type of an Amazon business, which typically they buy things from China, branded, send it to some other, send it in, sell it in US. Looks to be like a lucrative business, but without really too much of an intellectual property. But even if I look at today Trust.io webpage, it says, we buy like brands, and I was just checking it, like we buy great consumer brands. Now, this is also like changed a lot, like in a year, because I was talking to them last year and they are like, no, consumer brand, and now it's like consumer brands. Why? Because the consumables, you can expand it to all the other markets. And there is intellectual property, like building like a brand, like a beauty and wellness or the home and kitchen. I mean, it's not just about like, because as you mentioned, people put something into their hair or skin. I mean, there is definitely like some R&D there, and it's very personal. If you do a mistake, right? I mean, it's not good. That was one of the reasons, by the way, why people don't acquire, this type of brands, because you never know. Like, I mean, it's a bit of a risk. So it's not easy, like, because coming back to that, like, it's not because nobody thought about it. It's really difficult. And if you are successful, then you are not very different than the most successful brand operators like P&G, Unilever, or L'Oreal. You mentioned, like, you have people from there, and that makes a lot of sense. Now, Omar, you mentioned that like the Chinese aggregators or operators are even coming into the picture. Not only them, like if you look at the last 6 months, like all the new Amazon sellers, even, by the way, very interesting, 90% of the Chinese sellers are like private labels. Like some people think they are like booksellers, or they are, I mean, doing some reselling, or, it's not the case, right? And by the way, I started working with some of the Shanghai or, even Hong Kong based like schools, or let me call it like an accelerator. And one thing is like, whatever I say, they translate into Chinese, like nobody speaks English. But all these guys, like 100 people, they are developing private label. They are developing brands. I am not sure exactly if they are developing beauty products or if it would be applicable. But what's your view here, Patrick? Like 80% of new Amazon sellers are coming from China. The Chinese aggregators are becoming bigger. The China has a bit more advanced, to be honest with you, in terms of e-commerce penetration versus retail, Alibaba, and the other very big like marketplaces. So how do you see that also like with US?
I see strategic merit in kind of factories and other capital formation in China to basically take more of the value chain, right? And so instead of just operating a factory and selling it to someone in the US, who's living in Miami wearing flip-flops and is sort of earning a 20 to 30% margin on Amazon, why not do it yourself? So I think it absolutely makes sense for them to do that. They obviously need to sort of play by the same set of rules as everyone else. There's a lot of black hat tactics out there, and so we're mindful of that. But I think if you're a Chinese seller, I think it makes sense that traditionally they've been extraordinarily strong because they're very close to the supply chain, right? Where they've been, I think, relatively weaker vis-a-vis other sellers is on that sort of like marketing stack, right? In terms of like both at the branding level, but also on sort of the I'll call it kind of the digital marketing on Amazon. Not from a technical perspective, but just culturally, you could tell if someone was a Chinese seller. Essentially, the wording on the copy was a bit kind of goofy, and it just didn't kind of feel right. if you're buying a commoditized product, you don't really care. You're like, I get the cheapest price, fine. But they couldn't, it was harder for them to move into the sort of higher value added categories, whether it's beauty, personal care, health and wellness, et cetera. I think they're still going to have trouble in those categories. So I think you're going to see the skew of the Chinese sellers still remain mostly on sort of like, you know, durable products that are manufactured in China, where they're close to the supply chain. Because the reality is, if you're a consumer in the US or in Europe, you not just want, but you demand that the products that I'm talking about, if you're going to ingest them, if you're going to put them on your skin, you're looking for products that are made in the US or France or Germany, UK, what have you. Definitely. So that's that's a competitive advantage for companies that are based here. Not only we know the market, but we have a local supply chain in those verticals as well.
Right. By the way, when I look at your website, I'm not sure if that's like, do you have also an office? Like you mentioned Paris and New York, but what about like London and Shanghai? Like, do you have also like a Chinese connection as well?
Yeah. Oh, sure. So we have a big home and kitchen business, as you mentioned, with your kitchen, Home Hero, et cetera. So we've got a team of more than 20 in Shenzhen, China, that help on our supply chain for those type products that we sell. Our physical offices, I mentioned, are in New York and Paris, but I've got people in London, in Milan, in Germany. We're spread over the globe.
That sounds really good. And there, because of supply chain, I'm coming to a point which maybe it's a bit far-fetched, but as we see the current situation now, Christmas time arriving. Not everything has arrived yet. There's, everything. It's not going hand in hand at the moment. The ships, the containers, everything. And recently, what I've seen an article from Amazon that Amazon has whole ships chartered and put their own containers on the ships, send them over, put them full, bring them back. I mean, okay, it's very big and very far-fetched, but wouldn't this be like sort of a coalition with aggregators to do something like that as a test, in order to avoid paying 23,000 per container, because it's just not possible. The price is going to go up to the sky. It's just not possible. What do you think about it?
It's an interesting thought project. Shipping is very much a scale business, and so it's a tough business, and it's very sort of consolidated at this stage in the game. I think there's plenty of sort of white space and room for us to put capital to work in building brands. That's where our DNA is. That's where we think there's the most kind of value in the value chain, right? I come from a media background, so I really appreciate IP. And in media, there's a saying, kind of content is king. I think the analogs in CPG world are kind of brands are king, and we're looking to build IP there. That's where we're focused, and I think that's where we think the highest returns for our investors are going to be.
Okay, because what you mentioned before as well was about the copy of the Chinese sellers, and this is actually from our agency. This is our job. This is what we do for a living, and I can confirm this 100%. It don't matter how big the sellers, let's call them foreign sellers, not just from all around the world, who come from a non-English speaking background into an English speaking background, or into a European speaking background, into a European speaking market, all the languages which are present in Europe.
Omar, we call it the alien sellers. Like, by the way, this is how it's called in US. Like, for example, I have an alien number. I have an alien number.
I would support alien, but non-domestic. This is non-domestic.
Okay, so when we have them, for example, then if you begin to see that as well, these foreign sellers have a strong copy, this is when we begin to see real competition. And I can say that we are now maybe at about 40% from what I've seen, that some of these sellers really put some money into their listings, into the pictures, and into their whole brand. But the majority didn't do it yet, But I believe that the whole thing will be picked up, raised in, the bar has to be raised, has been raised already. And all of these sellers, they will go down if they don't take care of their online presence in general.
Yeah.
What do you think about that?
Yeah, I mean, my perspective is this, like what China has done to its economy over the last 50 years is a modern miracle. I mean, let's give credit where credit is due. I mean,
Yes.
they have raised the standard of living of over 1 billion people, by a factor of 5 or 10 or whatever the number is. It's 100%. An incredible story. And I would never bet against, like that collective group of folks figuring out Amazon and figuring out copy, right? The reality is, when I look at our business and our strategy of building brands, I don't want to compete on copy, because they'll figure it out, whether it's next year or 23 or there's no win to be had there, right? I want to compete on having a better product, having a product that you can't get anywhere else, having a brand around it that is mission driven, because certainly in Western markets, in the US and in Europe, that really resonates with consumers. They want to understand not just what they're buying and the features of the product, et cetera, but they want to understand who stands behind it. Like, is there a story here? Like, what is the ethos of the founders, and what is the ethos of the brand? And I wanted to do everything that I wanted to do from a product perspective, but I also want to feel good about using it. And so I think that's going to be increasingly important here. And so again, that's why we're focused on some of the categories that we are. And I think competing on that basis has long-term competitive advantages and is sustainable over time.
Absolutely. So as we are coming to the end of our show, I also would like to get your opinion on what the brands should do, because now 2022 is coming. I mean, operators raised a lot of money. There will be the valuations also doubled during this year. But at the same time, when I look at the supply chain costs increased by 30%, advertising costs increased by 27%. There is no indication the advertising costs will go down. So it's also becoming, and also Amazon is really screwing all the things about launching a product, all types of gray hat tactics, let's put it in this way. So they just want you to really do advertising, which means more money needs to be spent to raise to build brands. So what's your kind of maybe final thoughts about what brands should do in 2022, and what is the right time for them even to start having a conversation with you?
So if I had 2 words of advice, it would be different. Be different. If you're selling essentially the same product as 5 other people in the market, even if you've got a different brand around it, it's going to be hard to compete over time. Chart a different path. Be different. I would say also one of the advantages of being on a marketplace is that you get instant feedback, right? I mean, those reviews are absolute gold mines. Both your reviews, your competitors' reviews, etc. The life cycle of a consumer product these days is probably measured in months, is the reality. Someone's either going to produce it cheaper than you or better than you. There's going to be a feature that you don't have, what have you. So you need to be different than, the other sellers on either side of you who are, competing in the marketplace. That would be my advice. And that's essentially, telling people to consistently innovate and deliver value to consumers. That's the name of the game here. That's what consumer products companies have done for, decades. And that's what Amazon sellers are going to need to kind of grow up and really kind of do. And that's what we're institutionalizing here at Branded.
That's great. So
do what works.
No, I mean, I really like that.
Listen to the market.
Listening to the market and being different, as I think these are the 2 things. And also that also kind of answers even the previous question, how to differentiate, what to do with if the Chinese brands are coming with all that collective intelligence and millions of people and low, cheaper costs and things like that. But it doesn't mean that the products are different, or it doesn't mean that they really take the customer experience and incorporate it back to the product, which is really a kind of a unique skill that the brand manager, the owners, or companies like Branded can do. So, I mean, thank you very much, Patric. I think this was really a great conversation. I mean, I learned a lot of things. I mean, looking forward to, your brand of success, and hope that you will have a great year, 2022.
Excellent. Hi,
I'm
great
sure
to be on
about that.
with Omar.
Thank you, Patrick.
Thank you. So.